So, picture this. You're losing hundreds, maybe even thousands of dollars, and you don't even realize it. And it's not because you didn't earn enough this year or because you went on a crazy spending spree. No, it's simply because of a few tiny, seemingly harmless mistakes you made before hitting submit on your taxes. Well, welcome to this explainer, because today we're going to look at exactly how you can protect your hard-earned money from completely preventable errors. Now you might be thinking, wait, losing hundreds of dollars? Seriously? Absolutely, yes. Every single year, literally millions of Americans rush to file their returns. And what happens? Well, some end up paying way more than they actually owe. Others completely miss out on super valuable tax credits, or, and this is the worst, they face massive processing delays from the IRS. And the kicker here? This isn't about not understanding some complex multi-layered tax law. This happens because of really basic fundamental errors right at the start of the process.
But hey, here's the good news. And honestly, it's the whole reason we're breaking this down for you today. Most of these simple tax mistakes are incredibly easy to avoid. Truly. If you just prep a bit, keep your cool, and, don't panic, you can make the entire filing process run so smoothly. You just got to know what to look out for. So to make this super easy to digest, we are organizing these mistakes into 4 main buckets. Number 1, timing. Don't rush it. Number 2, accuracy. The details matter. Number 3, money. Claim what's yours. And number 4, security, scams, and records. All right, let's just jump right into it.
Starting off with Section 1, timing. Don't rush it.
Okay, so this is a bit of a counterintuitive plot twist, right? But filing your taxes too early can actually be your very first big mistake. I know, we always hear that filing early is a great idea, but that's only true after you've actually received all of your required documents. I mean, you absolutely need your W-2s from your employer. You've got to wait for any 1099 forms, for things like freelance work, bank interest, or investments. Plus, you need your statements for health insurance, retirement accounts, education expenses, the whole shebang. If you jump the gun and file before all of those arrive in the mail or in your inbox, you really risk leaving out income. And if you do that, you'll probably have to file an amended return later, which just delays your refund or, even worse, triggers one of those dreaded letters from the IRS. Nobody wants that. Our source material uses this fantastic analogy that I think hits the nail on the head. It says, think of it like submitting a school exam before answering every question. I mean, it makes perfect sense, right? Even if every single thing you entered on that tax return is 100% correct, missing just one section ruins the whole thing and creates completely unnecessary headaches for yourself. But let's flip that coin for a second, because while filing way too early is gad, waiting until the absolute very last minute, yeah, that's equally dangerous. Procrastination basically breeds these cascading, stressful errors. When the filing deadline is literally hours away, people start to panic. And what happens when we panic? We miss deductions, we forget crucial forms, we make really silly math mistakes, type in the wrong bank info, and just rush through important personal details. Preparing a bit early gives you the breathing room to review everything carefully. You can catch and fix those mistakes well before you hit submit.
Moving right along to Section 2, accuracy. The details matter.
Listen, a flawless tax return relies on precise data, which is exactly why exactly zero guesswork should go into your income estimation. Zero. Never, ever estimate your income if you can avoid it. A lot of folks think, my memory is probably close enough. It really isn't. The IRS receives official copies of your tax forms directly from your employers, your banks, and anyone else paying you. So if the number you guessed doesn't perfectly match their official records, boom, you are instantly triggering questions and delays. Always, always use the exact numbers from your official documents.
And on a related note, please don't just blindly trust the machines. Tax software is an amazing tool, it really is, but it depends totally on your input. It can't magically detect if the information you entered is incomplete or just plain wrong. A human review, meaning a review by you, is absolutely essential. Every single year, people type in the wrong social security number, they misspell their own names, pick the wrong filing status, or list some old mailing address they haven't lived at for years. Software isn't going to automatically fix your misspelled name, so take 2 extra minutes to double-check your personal info. Actually, scratch that. Take 5 minutes. It can literally save you weeks of frustration later on.
All right, let's get to the good stuff. Section 3. Money. Claim what's yours.
So, there is this really common, crucial misunderstanding about how tax benefits actually work, and this is exactly where people just leave allowed money sitting on the table. A lot of us hyper-focus only on deductions. Now, deductions are great. They lower your overall taxable income. But tax credits? Tax credits can actually be way more valuable. Why? Because a tax credit directly reduces the exact amount of tax you owe, dollar for dollar. Depending on your specific situation, you might qualify for credits for education, having kids, or even just making energy-efficient improvements to your home. If you ignore these, you are literally giving up money that the tax rules explicitly say you can keep.
Now, what about the other money you bring in? You cannot forget your side hustles. Do you drive for a rideshare app on the weekends? Maybe sell some vintage clothes online? Do you freelance, create content, trade stocks? The tax rules are super clear here. It is your responsibility to report income from all these sources. And yes, that applies even if you never get a formal tax form for them in the mail. Keeping organized records of your side income throughout the year is absolutely vital. Otherwise, you're going to find yourself trying to completely reconstruct your entire financial life at the last minute, and that is a nightmare.
Oh, and here's a quick, glaringly simple reminder that so often gets lost in the stress of federal filing. Do not forget your state taxes. Depending on exactly where you live, you might also have to file a state income tax return. State rules vary wildly across the board, and yeah, while not every state has an income tax, you really need to be absolutely sure you understand the specific filing requirements for your location. Don't let that one sneak up on you.
Which brings us to our final part, Section 4, Security, Scams, and Records.
Look, protecting yourself matters long after you actually hit that submit button. One massive mistake people make is that the second their taxes are filed, they're like, done, and immediately trash their physical documents or delete all those emails. Please don't do that. You absolutely must keep copies of your filed tax returns, your W-2s, those 1099s, and all those random receipts tied to your deductions or credits. Having organized records is basically your shield if the IRS ever comes knocking with questions later on. Plus, they're incredibly helpful baseline info for when you have to do this all over again next year. You also really need to keep your guard up against IRS imposters. Scammers go into total overdrive during tax season. I mean, it's their Super Bowl. They're going to text you, email you, or even call you on the phone pretending to be the IRS. And their goal is simple. They want to steal your money or your personal info. Be highly suspicious if someone is pressuring you to act immediately, or if they demand payment through weird, unusual methods like gift cards or wire transfers. If it feels even a little bit suspicious, just stop. Hang up, delete the text, and verify it through official government channels.
As a bonus tip from our source, we really have to ask this. Will fear stop you from filing? Honestly, some people literally avoid filing altogether because they're absolutely terrified they owe a ton of money, or they're convinced they've already made some unfixable mistake. But ignoring your taxes, that essentially never ever makes the situation better. If you are feeling anxious or unsure, delaying indefinitely is hands down the worst thing you can do. Gather your documents, seek out some reliable guidance, and just face it head on. You've got this.
So let's wrap this explainer up with our key takeaways. Tax season does not have to be a nightmare. Just wait for all your documents before you start. Never guess your income, use the exact numbers. Seek out and claim every single valid credit you deserve. Keep your records nice and organized, and always stay vigilant against those scams. Just a little bit of preparation turns a stressful ordeal into a completely smooth process. Which really leaves me with one final question for you to ponder today. How much of your own money have you unknowingly surrendered to the government over the years simply because you rushed or maybe forgot to check a box? Take control this year, avoid these simple mistakes, and protect what is rightfully yours.